Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms here on a Friday afternoon with more than 80% of the S&P 500 in the red. Massar, and broader markets right now hitting session lows.
Yeah, absolutely. Going into a Friday, risk-off trade in a big way. I don't know if you guys have been watching some of the solar companies too. SolarEdge reporting that really took a hit today. And if I look at the Invesco Solar ETF, it's down about 6.5% today. It's down about 12% in the past 3 days. So this sector has definitely been under a lot of pressure as of late, Tim.
Yeah, concern about higher rates impacting potential solar buyers. And, you know, they have to pay more, Scarlet, for installing those solar panels. And inventories are piling up because people just aren't doing it.
Although you could make an argument that maybe renewable energy looks a little bit more attractive if oil prices do stay higher longer term. Of course, that's a big question mark, given that I would have thought with the Middle East tensions, oil prices would be higher. They did get to 90, but now they've backed off.
Yeah, and we should look at wire to wire, though. We talk about the volatility that we saw in the energy space this week. That shows you the jitters. Similar story when we talk about what we saw in the Treasury space. And, of course, here on this day, the VIX, while it is lower on the day, we should point out it's at 21 and change right now, which may not seem high, but relative to the last year or so, where most people thought it should be a lot higher, that is elevated, to be sure.
You know, we've got this trade, right? We're going into a weekend, and I feel like there's just so many questions out there, certainly the Middle East and the geopolitical tensions, you know, worried about a speaker. I mean, there's just this worry list, Romaine, that just, I think, maybe is scaring investors at this point.
If you want a bright spot, Massar, Dow Transport's in the green. A big part of that is because of a big jump that you're seeing in some of the trucking companies and railroad companies on the back of those earnings that we got out of CSX and Knight Swift. All right, let's go through the numbers here on this Friday afternoon. All the major indices save the Dow Transports in the red on the day. The Dow Jones Industrial Average lower by about 0.9% here on the day, and that's going to be good for about a 1.6% decline on a weekly basis. The S&P down more than 1% on the day, down more than 2% on the week, while the NASDAQ is going to close out the day down about 1.5% on the day and 3% on the week. The Russell 2000 not left out of the action, also sliding here by more than 1% on the day and more than 2% here on a weekly basis. And just real quick, Carol, I just should point out here, the S&P 500 did indeed close below that 200-day moving average for the first time since March.
Yeah, the technicians definitely noticing that. Do want to mention a headline crossing the U.S. fiscal year budget gap widening 23% to $1.7 trillion. That on revenue drop, right? We think about the money coming in or not coming in and what that does, Scarlett, to the budget gap. What I will say, though, S&P 500, Scarlett, more than 432 names to the downside today, 69 to the upside, 2 unchanged. So risk off in a big way.
Risk off in a big way, and that's reflected in the 24 industry groups in the S&P. I was monitoring this all day, and for a while you had at least 3 or 4 groups in the green. That has now shrunk to just 2. Telecoms and food, beverage, and tobacco, so your classic defensive sectors, and they're barely higher, right? Gains of at least 0.25%, 1/10 of 1% for food, beverage, and tobacco. On the flip side, autos, that's Tesla, banks, and of course that's Regions Financial, and software and services, all down at least 1.8% on the day.
All right, so let me get to some of the gainers. It was kind of a tough task today, and it's kind of random, if you will. First off, I'm going to start with AT&T. At its highs today, was up about 4%, finishing the day with about an 0.8% gain. Scotiabank upgrading the company to sector outperform from sector perform. That seems sector outperform from sector perform. Those are like minor tweaks, I gotta say. Citing its free cash flow.
Still green is green, Carol. Green is green on a day like today.
I just always am amazed with these ratings. Anyway, this is the analyst citing its free cash flow following Thursday's quarterly results. The stock's up about 8%, maybe a little bit less than that in the last couple of days, but it's been on a tear since the company reported yesterday. And that third quarter free cash flow was a big beat, $5.2 billion versus an estimate of $4.6 billion. So definitely impressing the street. Jazz Pharmaceuticals, it's a specialty pharma company. It's about an $8.5 billion market cap, rallying in today's session. Bloomberg reporting the company's exploring some strategic options, including a possible sale. This is from those in the know. That stock up 4% at its highs, finished the day, though, still with a gain of more than than 1% in today's session. And then Bowl, for those of you who like to bowl, Romaine, you like to bowl?
Bolero, yeah.
Bolero, up 2.6%, was up more than 10.5%, around 10.5% at its highs today. It's
timeless, Carol Massar.
Who doesn't like to bowl?
No.
It's the bowling shirts you like, right? Who doesn't like a bowling shirt?
Anyway. Have you ever bowled, Carol?
You know, what do you think? Of course I've bowled. Everybody's bowled.
Okay, I didn't know.
All right, well, the owner and operator
of kind of, fancy. So.
Bowling centers agreeing to a $433 million sale leaseback with Vici Properties for 38 bowling centers. So anyway, got investors' attention. This stock, though, is down about 16% year to date. 69% of the float is shorted, though.
All right, well, no shortage.
Bowl. I even wear bowling shoes.
We'll do group bowling. How's that? It just should be fun. I want to take a look at some of the stocks that moved lower today. No shortage of those. Starting with SolarEdge Technologies, falling by 27.27%. Shares plunged as much as 36.5% today after the company warned that third quarter revenue will be well below its guidance. It cited, quote, substantial cancellations and delayed orders. Talked about this a few minutes ago. Those higher rates are affecting the willingness of consumers to actually pay for solar to be installed. We saw other solar stocks take a hit. Enphase Energy, rooftop solar installers like Sunrun, SunPower, Sunnova Energy also taking a hit today. Regions Financial, it turns out the challenges to regional banks are not completely behind them. Shares falling today by more than 12%. It did slump as much as 16% earlier in the session after warning that it expects further declines in net interest income due to higher rates. You start to see a pattern here, guys, continue to take a toll on the bank. We should note that the results for the most recent quarter included a one-time charge of $53 million tied to check fraud. This is on top of an $82 million operational loss linked to a different fraudulent check scheme last quarter. And finally, shares of Okta falling late in the session as much as 14%, though closing at 11.6% lower this afternoon. This after the security research news site Krebs on Security said that hackers stole access tokens from the company. A few minutes later, Okta did confirm in a blog post on its website that, quote, our adversarial activity had occurred and said threat actor managed to view files uploaded by certain Okta customers who were recently involved in support cases.
Interesting. A little bit of a relief from the Treasury sell-off here on this Friday afternoon, with yields across the curve shifting lower here as at the close here, 8 basis points lower on the 10-year yield for the day. But we should point out on a weekly basis, those yields are up about 29 to 30 basis points from where they were last Friday here. So the biggest weekly gain that we've seen on a percentage point basis for the 10-year, at least going back to April of last year of 2022. Just to be clear. Yeah, and this is big. And remember, we were flirting with 5% earlier here. And this idea that, again, is not just about whether yields are going up or yields are going down, but it's about the movement. It's about that volatility that is really spooking a lot of people, not just, of course, in the bond market, as you know, Carol, but, of course, that feeds over into equity investors and their sentiment as well.
Yeah. You know, I saw something that Cameron Kreis wrote in our MLive blog, which was really interesting, which is one way that people buy treasuries, of course, retail investors in particular, is through TLT, the ETF that tracks longer dated treasuries. And shares outstanding, which is a proxy for demand, has climbed more than 300% since early 2022. The ETF performance in that same period, just on a price basis, has fallen about 40% in the same period. So even though the price has gone down, the demand has gone up.
I will say just to that, we were having this conversation off air yesterday, but this idea, too, of also pay attention to the total return funds, which actually are doing better than the price fund. So it'll be interesting to see whether investors, obviously sophisticated investors know that, but the retail hoard, whether they can figure that out on their own.
All right. So Fed commentary, does it go black tomorrow or go?
After Saturday.
After Saturday.
That's it, Carol. No more.
No more. All right. So that calms down a little bit, and we get a ton of earnings next week. So I am curious, when you've got the likes of Microsoft, Alphabet, Meta, Amazon, Visa, Coca-Cola, UPS, Chipotle, like, we're going to get a really big picture of how corporate America is doing, wages, cost pressures, outlook. It's going to be a big week in terms of earnings.
I mean, I think, go ahead.
No, I was going to say, what's the key word that you're listening for?
Efficiency.
Not AI anymore.
Efficiency. I think the key word truly is efficiency. I mean, talking about how these companies are controlling costs, talking about how they're pulling back spending. I'm going to be listening for what types of investments are they going to be making? Are they pulling back on some of those investments?
I do think it's interesting that when you look at some of the earnings that we've gotten so far, some of the things that have been an upside catalyst has been commentary about CapEx and certain types of spending. And I know it's only a couple of companies that we've gotten that have really had a chance chance to discuss that, but we're going to hear a lot more about that, or at least we're going to want to hear a lot more about that from a lot of the companies that are reporting next week. So it'll be interesting. That's what I'll be looking for to see longer term, whether there is sort of a tailwind of CapEx coming.
Yeah, and especially what kind of forecast they're willing to make. It's a stretch to even say anything going into next year, right? So how much are consumers actually really willing to extend themselves at this point? It's a big question mark.
Do you know what the best performing stock is in the S&P 500 this week?
Wasn't it like a trucking company or something?
VF Corp.
Oh, VF Corp. Yeah, you're right.
Yeah, and then you got Solar Edge at the bottom of the pack.
Yeah.
Get your rest, everybody. It's going to be a busy week next week.
Are you working a full week next week?
What do you think?
I think I am.
What do I think?
Yeah, I think I am. Check my calendar.
Help me out here, Scarlett.
Yeah. Tim's here on a Friday. What happened?
The four of us are here on a
First one in a long time.
That's the one who's here. All right. Looking forward to that bowling party. All right. That's a wrap, guys. Have a good and
Are
safe.
we committed to that?
Yes, with the shoes and the shirts.
Definitely.
We got viewers and listeners who are going to commit us to it. All right. That's
They're
a wrap.
invited too.
Thank you.
Yeah.
Looking forward to it and beating your pants off. All right. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. Folks, we will see you on Monday.